Good evening and welcome back to another episode of Weekly Review of Indian Equity Markets. Let me start out with the standard disclaimer. I'm not a SEBI registered investment advisor, and everything that we speak about in terms of indices, securities, uh, levels across each of the instruments that we consider are only from a perspective of a review of the markets and price action during the course of the week. At no point of time, any of the points that are discussed here is an invitation to buy, sell, or any or subscribe to any of the views that I hold. You may please consult your advisor, financial advisor, in terms of all the actions that you take in the market. Uh, so, with that, let's get into the discussion in terms of how the week has panned out. So this week we have had an amazing run in the markets, and almost all the indices have made all-time high in this week. What you see this week on your screen is a chart of Nifty. As you can see, Nifty opened up on a with a gap and consistently moved up for the week, and we closed it uh, almost the high point, or very close to the high point of the day, of the week, and it's a very positive sign, and the candle is extremely bullish, and look at the way volumes have picked up. So while there was some bit of buying that you could see here, but the volumes this week have kind of are higher than previous many weeks. So I think we had seen a nice upward uptick in the buying here, but from there, if you see, these were the two other candles before which we started seeing the downward move, and then now we have seen a nice range and volume expansion as far as the candle is concerned, backed by absolutely strong volumes, and this is very heartening to see. So from a price action perspective, it's a very bullish candle, and can't find any fault in this candle, and looks like we are definitely heading higher even from here. Uh, so one of the major catalysts for the week was the election results that came out on Sunday, and as a surprise, the ruling party, which is the BJP government, gained majority in three large states, and these three states are extremely critical for the future of BJP when it comes to central election, and I think that's something which has uh, given given a new set of hopes and wings to the market, and the market has started moving up again. And we've seen some large transactions as well. FIIs have come back, and we are seeing some large uh, stock-based transactions as well happening in this week. And now let's look at what has happened in this week from a sector perspective. Now, Bank Nifty is something which has made the swift move that we were talking about. So look at the way Bank Nifty closed the week up 5.5%, and it's not a small number by any stretch of imagination. When you compare that with Nifty, Nifty was up, I think, 2.5%. Yeah, sorry, 3.5%, and compare that with Bank Nifty, which is 5.5%, which is phenomenal. And if you recollect, uh, week before and also the last week when we were talking about Nifty, we were we were excited to see these two candles, and we said that this can be a good area to kind of go ahead and build positions. So this was one candle, then this was followed by a second nice candle, and this, if you were to kind of set up daily moving averages here, so this was a candle which reinforced or confirmed our positive stance as far as the market is concerned. So one position here, the other position was here, and the third position should have been somewhere here. But the way Nifty broke out, and it just Bank Nifty broke out and just moved higher, it became impossible to take any positions. The fact is, look at the way the stock has the security has moved, and we made a, if one had taken position here, it's a 7.5% kind of gain in a week, and it's fabulous. And this is come on back of the stocks that we discussed. Let's kind of get get to see few of those stocks. So the big call was that, or when this was forming on Bank Nifty, we traced it back to ICICI Bank, and the structure of ICICI Bank again looked similar, right? So this is what ICICI Bank was doing at that point of time, and we then went back to this area. Let me just remove all the markings here. Yeah. So we were kind of posturing or kind of looking at this structure, while the third dip didn't happen, but we said that this structure looks very similar to this one, and it gave a lot of confidence, and uh, it it looked like ICICI Bank can lead the up leg, and which happened. Actually, it's Axis which led this up move. If you look at Axis, when when this was happening, Axis was very close to its all-time high of 52-week high, and it just kept moving higher. So 13.5% move in Axis compared to 8.5% move in ICICI, and then the big support came in from the big boy, right? So from a structure perspective, ICICI HDFC had no structure at all, but it came to support of Bank Nifty, and this is where we see, and it's a surprise candidate when you look at this, when you compare this with what has happened with ICCI, which is where we were betting on. But having said that, I think this is a fantastic move, and it has kind of changed the entire texture of the market, and the market has started kind of moving, heading higher, much higher. And if you see this leg of the up move, it has happened on the back of move in the large cap as compared to mid and small cap. So while Bank Nifty and Nifty IT also had a decent run for the week, uh, what is more important is look at the structure of IT. It is doing fabulous contraction, and it is all set to take off again. And now you compare this with the FMCG, which had broken out, and we spoke about this again last week. The FMCG broke out. It tried to move higher, but unfortunately, we are seeing a sell off in FMCG. But that should be okay. Let's see if FMCG does a retest, forms another contraction pattern here. Let me just remove all the markings once again here. So this is one set of contraction that we are seeing. Do we see another contraction in FMCG, something like this, and then willing to take off somewhere here, uh, which is a possibility. We cannot rule out possibility. We have to kind of remain patient here. There's no point in trying to kind of jump in and jump out of the ship. Just have patience, keep moving, keep looking at what is happening in index, and if the contraction is good, and good thing is stop loss is going to be here. Assuming if one has built position here, right, at this breakout, stop loss is very, very meaningful. It's just about 5.5%, which is definitely not bad. Now let's look at other sector which you were very bullish on, service sector. Look at the way breakout has played out in service sector. This is fabulous, and this is not something that we've been talking about for a week or two, but we've been talking about it for months together. And this is how service sector has taken off. Now look at the daily candle of service sector. Now compare this with say Nifty 500. The better way to look at it would be say mid cap. Or say small cap 250. Look at small cap 250 candle versus look at service candle. So momentum is back with large caps. Very clearly, momentum is back with large caps, and one has to be positioned around large caps rather than trying to still keep finding new ideas in mid and small cap. I think this is going to be a very interesting phase in the market where mid and small caps can take a breather, given that they have just gone vertically up, and large caps can do can kind of surprise the market, because the entire market over last 6 12 months have been positioned purely around mid and small cap. So I think this is broadly the structure of the market. Now let's look at few of the other sectors as well. Let us see, where is auto here. Auto auto has been on one way up move, and there's nothing wrong if it tries to kind of does a pullback, consolidates a bit in this region, and then takes a breather. He comes, test this support zone, and then tries to move up again. So pharma took off from here, and it tried to move higher, but I think this week it has stalled at the previous week's high. So let's see how it plays out. But this is so obviously it's not a one-way street that everything will keep moving higher on a daily basis. But structure-wise, pharma is definitely in a good structure, and there's no reason why one should kind of get shaken out of this structure so easily. Energy has done exceptionally well. Has been it This possibly was is one of the best performing indices for the week. Uh, we need to look at what has kind of moved the energy stocks higher, but broadly the structure of Nifty Energy is very strong. It's broken out of this cup and handle, if one were to say, to look at this cup and handle, and has moved up by 15% in last 4 weeks, which is phenomenal. So let us just see what's happening with metal, because there are a lot of metal stock which have done well in the Nifty Metal, which broke out of this cup and handle or this flag pattern, has moved higher this week. Again, it had a decent week, and and we remain bullish. And from a very long term structure point of view, seen a correction. It's consolidated for over 2 years now, and it's taken off. Consolidated for a period of what, 620 days, and then it's taken off, which is pretty good. The structure of metal is also in a great structure. There's no reason why one should get worried about this particular index. We'll have to see how, if this plays out in terms of if there's some consolidation for next couple of weeks, couple of months, and then it again takes off. So advantage large caps very clearly. Let's not forget mid and small cap. So this week we have seen some bit of slowdown in momentum as far as small cap is concerned. Let's look at micro cap. The story is similar in micro cap and mid cap. So mid cap has definitely ended positive, but I think all the candles have similar kind of texture and outlook, which is all of them are losing momentum. And compare that with large cap, I think their large caps are in a different world of their own. So overall texture of the market remains positive, but it's clearly advantage large caps versus mid and small caps. So that's something that one should take note of. Let's look at what is happening in other key indicators that we kind of look at. So oil has retested the lower end of this cup and handle that we're talking about. So a position here can be built, and with a very very small stop loss. Stop loss is close to 8.5%, which is definitely not bad, considering that it can be looked at from a swing as well as can be looked at from a trading point of view. So a 10% position here, a 10% loss on that 10% position would mean that overall 1%, just about 1% loss, which is absolutely par for the course. Now let's look at US markets. We'll start with Nasdaq. Nasdaq for the week closed up by 0.5%. It's retested the midpoint of this candle, and it seems to be in good structure given that it's broken out of the cup and handle that we were talking about. Let's look at Dow Jones. It's Dow Jones is just about zero point zero 0.01 higher, but nothing. The structure is pretty good, so there is a possibility that we may contract. We may do one more round of contraction before we take off. So now SPX is up 0.41%, which is good. So it's clearly US markets and Indian markets are in upswing, are in up leg, whereas within Indian markets, small cap and mid cap are something which are taking a breather. Look at the structure of this index versus IT index in India. Let us see if we can do. This is IT. This is SPX. Sorry, let's look at this. So, shall consider 707 days is where we have consolidated December. Yeah, pretty much. So very similar structure. While there's some difference, definitely, but the structures look very similar, and we are somewhere here at this point, and we can just take off from here. So broadly, its advantage. Clearly, I think this is one sector which seems to be in a good shape, good structure, and something which can definitely head higher from here. Obviously, Q1 is typically a softish quarter or softish point of time for most of the across the world. So let's see how things pan out. But I'm very positive on what can happen with IT index. So this is broadly what the how the indices have played out for the week, and if I were to give out a quick summary, I think clearly two things come out from this entire conversation. Given the way markets have moved, there's not much to kind of look at and keep or draw too much of conclusion from this market's action, because we are already in a upswing. So the upswing will move, but one clear factor of differentiation is the fact that this time around it's large caps which are leading the charge, and they seem to be in good position and can continue and carry on from here. So with that, let me close this discussion for the week, and thank you so much for joining. Uh, and look forward to seeing you again next week. Have a great weekend. Thank you.